Good morning, traders. Welcome to the TMT Stock Market Strategy video for Monday, December 28th. Hope everybody enjoyed their Christmas holiday over the weekend. Nice long weekend. And this week, again, we're up against the New Year's holiday celebration, which is on Friday. We're going to have the same market hours as we did on Thursday. So we do have a shortened week, and we do have the holiday trade going on. So just be aware of that, okay? Looking to short, be very careful. Thin to win is in right now. And what I mean by that is that usually when the markets are very quiet, and there is, of course, no geopolitical event, any type of news-driven event, the markets generally will drift higher. So be careful with any type of shorting going on right now. What I am going to show you is I'm going to show you all the indexes. I just wanted to show you the McClellan oscillator here. You could see we're at 50%. So we're getting to be in an overbought state. We're not right now, so we're still within a neutral stance here. So I'm going to take today and probably the rest of this week neutral to slightly biased to the upside. And what I mean by that is I'm going to be looking to buy pullbacks into some decent areas of support. After next week, then everything else is going to be changing. So I'm going to put out a longer-term video between now and of course, next Monday. And I mean the longer term, meaning we're going to be looking at monthly, weekly charts, daily charts, and we're going to see get an idea of where this market may be headed in 2016. Now, as of right now, the analysis to me says that we still look like we are headed lower before we go up, at least in the first quarter of 2016. So I'm going to get that to you out as quickly as possible. I'm working on it now, putting together a lot of charts, and it will be a longer video. So remember, the longer-term picture is going to be a little longer as well, okay? All right, so let's get right into it. What do we have here? We can see our McClellan oscillator is right around the 50%. So that means that we're looking for me personally, I like to see the McClellan oscillator. Here's really where you want to read that overbought, right up in this area here. This is where you want to watch anywhere from 60 to 80 being an overbought and below 60 and 80. This is where when I get to see the McClellan oscillator down here, I'm looking for either a bounce or a sell-off, and this is exactly what happens. And these are the areas that you want to watch, okay? And Stock Charts has you could do that's free, and it's a very good reading. And I'm also going to show you another breadth of the market, if you will, on how on what to look at when you're looking at an overbought state, and that's really going to help you kind of guide you into where to go, what direction at least that the chart may be headed. Okay. So anyway, let's go right into the index charts here. You could see clearly. You could see clearly here that that we're going to be looking at the bonds. We're looking at gold. We're looking at oil. These are going to be the big plays going into 2016. And what I mean by that, why? Well, you got to look at bonds is right now looking at a W bottom here. Okay, we have the neckline right up in this area here, and as you can see, let me just kind of draw this out for you guys. Right here is going to be that neckline. That's going to be big, and you can see we have that left side and of course that right side right here. So this is a big area here, and this is what I'm going to be watching for bonds, because remember, when bonds start to break and they start moving in one direction, one way or the other, I mean, look, you could see, that W formation, and I'm just going to draw that out for you guys a little bit better. You can see that. That's a W bottom. Here's your neckline, and this is what I'm watching right here. I'm going to be watching that area here, and that's going to give me a good clue, a good sign if bonds break out or they start to break down. That's going to be a different story. But right now, we're still in this kind of big area of chop here. So I'm watching that going into 2016. And again, I'm going to put out bigger charts out here, okay? Let's take a look at now. I want to show you some of the commodities. Here's the dollar index, and you can see that bullish falling wedge. We broke out. We came back. We back tested that area, and we're just sitting here now, okay? Now, this is going to affect the commodity sector, obviously. It's going to affect a lot of asset classes if at least we even challenge up in these areas. This is going to be a big factor here, so we want to watch this as well. And what happens? You could see we're in a holiday trade mode. We're just kind of just stuck and just chop it up and down in this area. USO, which is the oil sector, right? It's the oil tracking ETF. And if you look at it closely, and I mentioned this the last time, we have a really, really nice bullish falling wedge pattern, which we broke out of, right? We just broke out of that right here. Now, usually what happens, we kind of will tag this area here, and then we'll kind of back test it, and then you should jump higher. I personally think, and I mentioned this before. Let me grab this out here. It was right up in this area about 2 weeks ago, I got a bunch of emails. Oh, you think oil bounce? Oil's going to rally? Well, to be quite honest, a couple of days doesn't make a trend, right? We want to see a basing pattern, which this is what it's doing now. And even if it dropped and broke even lower, and I think you're going to get this back lower into the low tens, because what happens is when the dollar does break out, you're going to have oil really dump hard, and I think it's going to take down the commodity sector as far as the precious metals, and we're going to see that next. So I think we get one more shot here where I think we can buy oil. Crude oil, that is, the contract somewhere between $32 and $34. Okay, and USO, I think you could buy it somewhere in the mid tens, and I think that's going to be the spot, at least to get that local low, if you will, and then we get a rally higher. Take a look at GLD. Now the gold contract doesn't have the bullish falling wedge pattern here, but you could see that we rallied up, and then look what happened. We came all the way back down and tested this thing, and then we rallied back again. So this, to me, you see how we just got close to that 100? I think here, this is where you break 100. You take all of the stops out below 1,000, okay, or 100, 1,000 meaning the gold contract, and then you get to about 980, 990, and that's when you start picking that gold. And I think that's where you'll get that low in for some time. And you'll get a big rally in gold, because what happens is it'll get everybody short. Everybody gets short. The algos will run the stops down and flush all of that area, and that's what we need to do. We need to flush that area out, because we have a buoyancy in the market here of that 1,000. And more than likely, when you see any of these commodities, they usually like to break that psychological area, get everybody flush, and then they turn it around right away. Okay, so that's what I'm watching for next week, and of course the 2000 part of 16, the early part of 2016. All right, so let's take a look at now some of the indexes, and we said this before. And it remains the same. Nothing has changed here. You could see we have the bull flag pattern, and we also have our M formation, right? Now we did break that level, right? We did break it, but we came right back up again. Remember what I said? Anytime you get a breaking pattern with a neckline, whether it be up or down, don't take the first trade, because why? What happens is we get the first trade up, and then usually it'll either revert back up and get everybody stopped out, or it'll give you another opportunity to get that short. What I mean by that is that if you have this pattern here and you have this neckline and we break down, we should break down and then fail, but we get a bear flag pattern, and then that's when you really want to short right here. That's really the spot where you want to short, not on the first break, because usually it'll try to test it to get back up again. But nonetheless, in this pattern here in the spiders, we have a bull flag and we have an M formation still in place, where that's a bearish pattern. So we have a bullish pattern and a bearish pattern. We have this bull flag here that we're now in between the two upper and lower level of support and resistance, okay? And just chopping around here again. Just killing all of these tradies, these retail guys that are trying to trade on a holiday week. Now, again, if you are going to trade, and I look for extremes in order for me to get into a trade between Christmas and New Year's. Otherwise, I will not trade. I will just step aside and wait, because this is just chop. Look for a spot and then stick with that spot and make sure you have your stops in place. That's the only way to trade. Day trading is almost non-existent for between Christmas and New Year's. Now, we did get some great holiday trade between Thanksgiving and Christmas, and I mentioned that last month. We should see some volatility, and we did. And I think the volatility will continue, and it's here for quite some time. Transports, here is a big problem for me, guys, and this is what I've been saying all year. Market divergence still in place between the transports and, of course, the Russell. Now, here is a nice bull flag, bear flag, bull flag. Sorry about that. And you can see this break on this symmetrical triangle, right? We had that little bit of another bull flag pattern here, you can see, and then we broke down again into another bear flag. This, to me, is telling us the market is going nowhere. Now, what I mean by that is, you're not going to have the transports in a Russell 2000 not go anywhere and the rest of the market go higher and make new highs. That's not going to happen. It just generally does not. Can it? I'm sure it can, right? But I generally, when looking at the market for so long, when the transports in a Russell are in a rut like this, it's not happening, okay? So this is what we need to see. Get back above the 20, get back above the 50, and eventually try to get at least back above the 200. But we're talking a long way around here. So this, to me, looks like we're going to see some further downside before we see some upside movement, okay? Here is the IWM, and the same thing. These are the two leaders, guys. All right, this is a great gauge of risk. This is sentiment of the market here, the Russell 2000. If the Russell is not rallying, what's going on? We got some major problems here, okay? And this is why the video is a little bit longer, and you've seen this before, but I'm just making a point out. Until I see some changes, I think risk is to the downside. Even though we're rallying a little bit here, it means nothing to me. We don't even have any movement in these key asset classes that I've shown you, okay? All right. We have also another bull flag pattern, and what do we have here? Yet again, we have a multiple pattern. We have a bull pattern and a bearish pattern. And again, here's the M top formation. We didn't quite break that, so we're still within this bull flag, right? Look at this. So we have conflicting patterns, and what's the best thing to do? Step aside and let the market tell us what direction it wants. Lastly is the Qs. Again, I drew this in blue. Same thing, right? M formation. Now, if we continue to chop around it, this M pattern is just we're going to be negated, and all we are now is just in a sideways consolidation. Because remember, the longer this flag is not going to continue much longer, and then this will just step away, and we'll just have an upper end consolidation here, which is not a bad thing either. Right? And then we're just going to see, we're going to wait for the break up or the breakdown. And really, that's what it's going to be. And for those of you who are trading, scalping, then you know that you're going to be buying these lows and you're going to be selling these highs until it doesn't work anymore. Okay? And that's really what's happening. We're really in a holding pattern, waiting to see which way this direction the market's going to be headed. Okay? Now, we are looking for clues that we want to anticipate a direction. And right now, to me, with market divergence, I think we are still headed for the downside until something changes. But we'll see. Let's take it one step at a time. Hope it helps. Again, I hope everybody enjoyed their holiday weekend. Again, we are also having our New Year's week. So just keep it light for the week, guys. Talk to you soon.